Hi, my name is David Muchacha. I'm based in Melbourne, Australia. I've been here for about 12 years now. Um, I am an investment property advisor. So if you're trying to get into the property market or you want to expand your portfolio, stick with me. I have a few things to introduce you to at the end of this video. Today I'm going to talk about a couple of things, mainly just my journey from coming into a new country, and also my career path that I chose to take and how far it's taken me so far. My A levels, I did all right, but not well enough to go to University of Zimbabwe. Lucky enough, I had two options. I either had to go to England, where my mother is, she lives in Birmingham, or come here to study. So I got an opportunity here first before I could go to England, and I got a student visa to do nursing here. So I actually came here as a nurse, as most of us I would imagine. So coming after here shortly, obviously went to university, did a course in aged care because I needed a job. So I did a certificate 3 and a certificate 4 in aged care, worked in aged care for I think about 5-6 years. And along that time, I also did part jobs in NDIS and disability. I would imagine most of us had taken that path. But right around that year 5 mark, I thought I needed a change. I didn't think nursing was the main thing for me personally. I enjoyed it. I loved it. If you work in HK, most people there are lovely except for the exceptional side. But at most part, it was very enjoyable. I did night shift, so pretty much nothing to do really overnight. But I thought I needed a change, and lucky for me, I met a guy called Lucky actually at the gym, and he actually helped me out transition from being a nurse into finance and mortgage broking. How we did that? Very simple. So he was already a mortgage broker. He had his own business in finance. And during conversation in the gym, I just asked him what he did, and he said, "Oh yeah, I'm a broker." And now he asked me what I do, and I said, "Oh, funny enough, I'm actually doing a diploma in finance and mortgage broking." And he said, "Oh, do you have a job yet?" And I said, "No." So he gave me a shot. But the catch was, he was testing me out. So I worked for free for about 3 months. Just him having a sample of what I do, and whether I'm going to be a good fit for his company, which I suspect anyone should take that sort of route. So I took the opportunity. So I took that offer. I took the opportunity to work for him. And while I was there, he discovered that I was good on the phone. When I was speaking to the phone, I remember my first few phone calls. Every time someone would actually pick up the phone and I'm speaking to them on the phone, everyone else in the office would just keep quiet and listen to me and have a bit of a laugh, because I like to keep people entertained over the phone. And one thing I think was more interesting about that is what he told me was, you can't see someone smiling at the other end of the phone, but you need to make sure you feel the smile when you call someone. So you got to keep them excited to keep talking to you and convert that into a meeting. So I learned that, and I did finance with him as a broker assistant for about 6 months before he introduced us to property, and I sort of took charge of that property arm of things. I started, running the marketing, running the property appointments, trying to convert people into buying investment properties. And the idea then was, how do you pay off your home loan in 8 to 10 years using an investment property? And we were at that time selling dual occupancies across New South Wales, around Newcastle area, and also around your Park Ridge and Logan areas in Queensland. Great stuff happened. We created some really good stuff until I decided it was time to move on for myself. So I moved on and joined a bigger brand. And the whole idea behind me leaving a smaller company and joining a bigger brand was, I needed to learn more about the industry as a whole. And there's no better place you could get an idea, a full circle idea of what your industry is mainly like, other than working for a big organization. So I chose an organization that was very well represented. Number one at that time, I think it's still sort of in that number one, number two at current state. Learned as much as I could. And I think most of my clients were actually of African descent, good to say, Zimbabwean in particular. And I've kept on some of those relationships, or I'd say most of those relationships up until today. I'm still working with those same clients, helping them invest in more and more properties. And if there's anything that I would say I'm proud of is, being able to show someone value at first instance, and then they follow me through to, 3 or 4 more transactions. It's very rare, but I've just been able and lucky to do that. I want to take you back to the moment where I made a choice or decision to sort of transition from being a nurse in general to doing finance and going into the mortgage broking industry. I think for a few people that I do know personally, it would be uncomfortable to sort of take that route of like I think I was speaking about this earlier before we started recording. So my lifestyle sort of changed. I was working night shift, so I'd start work at say around 9:15, finishing at 6 in the morning. And then from 6 in the morning, I'll go home and sleep. And then I have to wake up because I need to start my finance job at 12 and finish around 6 to 7 p.m. For a lot of people that I knew personally back in the day, that was really uncomfortable. But I saw it as an opportunity. And I think there was no way I was going to know whether I'm good at something or whether I'm remotely can access something if I didn't try it. It's something that my parents always say, unoziva say you always gotta give it a shot. So I took that shot where it was really uncomfortable. People my age at that time, I think we were still just partying, we were having fun, right? But I sacrificed that part of me. I couldn't party as much anymore. I couldn't have the weekends off anymore because I'm now in an industry that requires you to work on Saturdays at most times. So taking that part of my lifestyle away and replacing it with work, but then just also realizing a few good rewards that I was going to get out of it, kept me going a little bit more longer. And I remember the first phone call I ever made in that office. Although I wasn't just, I would say probably naturally okay with speaking to people, but because you generally have a different accent when you're coming from a different country, that first phone call was really uncomfortable for me, like talking to someone else, and it was really intimidating. And that person, lucky enough for me, was not very rude. They were just remotely slightly a little bit rude, but not to the extremes, right? So I called just like a normal person would, and I remember just saying, hello, is this Steve? And he was at the end of the phone. He's like, yes, and you are? And I said, oh, my name is David. I'm calling you just to see if you want to refinance your mortgage. He's like, yeah, but David, where are you calling me from? I don't even know you. You want me ask me if I want to refinance my mortgage. And at that moment, I was like, oh, what do I say next? I'm stuck now because I've never been confronted like that. Even though the person is on the other end of the line, I can't see them personally, but I could feel that this person is being hostile. So I hung up. I hung up the phone. I couldn't take that. And then everyone just set me down and said, okay, here's what we're going to do. We're going to write you a script so you can adjust. Say everything on the script as is. And then as time passes on, you will adjust to, channeling the conversation in a way that you're getting these questions on the script answered, but you're not really speaking like a robot. So the biggest takeaway was, obviously, when you're starting, you're not going to be the ultimate best. Even when you've been doing something for some time, you're not going to be the best at it, but it's just realizing, being able to see your progression and how good you are getting over time. And the only way you can get really good at anything is just by doing it. You have to try a few more times. Obviously you're gonna mess up the first time, but you just always gotta do it. And something else that I took on from this guy as well, that was probably most important thing ever, is giving it a shot. I remember the initial conversation in the gym when he was saying, so what do you want to do with yourself? And I said, oh, well, I just want to try it. I don't know if I'm going to be good in finance and all that. And he said, are you good on the phone? And I was like, I've never really called anyone. I'm a nurse. Like, I don't really need to call anyone. I do speak to my clients face to face. And then in that moment, he said, yes, but you do take care of clients though. You do realize that that's a transferable skill, right? You do communicate with people who are much older, sometimes demented. So you gotta have a communication skill. So in that moment, I'm like, oh, okay, I never really looked at it like that. Like, I just thought, it's a normal job. But thinking about it now, it is a skill. You can't just walk into a nursing home and start communicating and having a sustainable conversation that's actually longer with people that you don't know. That's an actual skill. So you can transfer that into your new jobs. If you're thinking about, moving from your nursing job into, I don't know, more corporate world, there is a few things that you will realize are actually transferable. Maybe not right in the moment, but sometime along the lines, you will realize that. And another thing that I would say I'm probably bullish on since starting on this side of the world in this field is personal development. Now, whether you are working a job in Australia or you're working a job overseas, wherever you are, I think in whatever role you are doing, my understanding in my nursing days was there's always someone getting paid more to do exactly what you're doing. That was my understanding. I was like, yes, I'm a nurse now, but then there's like a higher level where you become an RN, and then there's like an ADON that we used to have those in HK. I don't know if it's still the same. And then the ADON was like the big boss, and then they had a boss, and you just gotta always upgrade yourself, because the more you learn, the more you know, and the more you know, you can transfer that. You can cash that. You can definitely take that to the bank. So I've been very bullish since then on personal development. And I think since then I've done so many courses on personal development, on just general entrepreneurship courses, anything to help me scale up my skill, whether it's selling skill or business knowledge or just being a better person in general. I've always been bullish in that. And I think in recent times I did Blue Now, which is like a really, really good course for African entrepreneurs. Still learning a few things from there that are now applicable, that I am realizing now that's very useful in my career long term. But also it's skills that I can share with other people when they need help advancing in certain stuff. So self-development is very much important, whether it's by a book or you pay for a course, whether you've got a mentor that's mentoring you. It's very important to always upgrade yourself, same way you upgrade your iPhone. Do now. So I moved out of the finance space. I'm just focusing on purely property. So whether you're trying to get into the property market or you want to expand your portfolio, but I'm gonna probably focus more on the trying to get into the markets, because I think a lot of us do relate to this more than ever. Now, as young people, we've got a tendency, or not a tendency really, but usually the trajectory is, you get a good job and then you get a car on finance and then you just live your life happily ever after. And there's nothing wrong with that. But then again, it comes a time where there's a turning point where you're like 29, 30, or just later in time, where you're now thinking, okay, I need to buy a house. But then again, you probably missed on a few repayments, and the finance is really hard to come across, or just in general, the deposit savings are not there yet, and you're really struggling, but you really want to get into the property market because you now have a good enough income to get a property, but the banks just won't look at it. So lately, I've been focusing more on finding options for people that have a willingness to get into the property market, but they just generally don't have enough deposit to get into the market. And how have we been able to do this? So we've partnered up with a few of our finance partners, and they're doing anything starting from $15,000 to help you get into the property market. So with 15,000, they'll create a payment plan for you where you save up for the rest of your deposit, and in 12 months you get into your house, the first one that is. We do have a finance partner also that does credit wipes. So if you have any bad stuff on your credit you need help with, they'll sort of solve that issue for you. Now, why am I mentioning more finance than anything? Property is a game of finance when you really do think about it. No money, no honey. That's basically it. So if you can't fix the money side of things, then you can't get into the house. The house side, it's a vehicle, it's a tool. It's just supposed to produce the numbers for you. Where I do now have the technical knowledge and the experience to sort of guide you through the property side, but we can't really get there unless we fix the finance thing. So for most of my younger clients, I find the conversation is more, okay, how do we bring up the deposit amount first? And then we get the house. When we get in the first house, we're not overspending, which is some of the advice that I do give to a lot of my clients. A lot of people do overcommit when it comes to buying a first house. We want to buy the, the 5-story house in Turak, or you want to be right in front of the water and you buy a boat right after that. Although that's the ideal lifestyle, but if you're starting out, you might want to revisit your options. And that's what I'm here to do. So it's just giving you guidance on where, I call it affordable luxury. So where can we find the best house for the least amount possible, so that now you still have a bit of a borrowing capacity to tap into the second property. Because realistically, on average, data says it takes about 4 to 5 years for anyone to get sick of their home. In some cases, less than that. So you overspend on your first house, 3 years later, you don't even like it. You want to move out. But then you've maxed out your borrowing capacity and you've paid only a portion of your mortgage. You can't tap into the next one. So you're not stuck, but still, it's way more harder for you to tap into the next one. Here's what I would rather do in that situation. Say your borrowing capacity is up to 900. I would spend 500-600 on a modest house. Really nice, affordable luxury. Like I said, you have everything you need in a house. But what we'll do with the remainder of your borrowing capacity is now we're tapping into an investment property. So your bank will actually look at your rental income from the investment property as part of your income. So that 900 will potentially increase to 1.1, 1.2 mil. Now, with finding investment property, you have two now instead of just buying one house. Now, what are you doing with two? Now, you don't have all your eggs in one basket. You've got two capital growths now. So your house will go up in value, investment property will go up in value as compared to just having one house going up in value. So you get investment property in Tarnet and you're living, say for example, in Clyde in the southeast, two capital growths, you combine that at year 5, year 6, you have a substantial amount to buy the third one. Now, the third one you're free to buy the mansion if you can afford it at that time. But I would advise people, most of my conversations I'm having now is, let's go for the least amount possible by getting the best house that we can get for that amount. Let's build a portfolio as opposed to just having one. And then years down the line, if there's an opportunity for us, we'll review your SMSF opportunities. Now we're doing, either a subdivision with the SMSF, or we're buying, a few houses under your super fund as well. So it's more about, the biggest focus for me is, yes, I'll help you get into the market, but how do we continue growing? How do we not mess up in the first instance so that we have an eggness? Now, you might think, why do I need 10 houses? Why do I even need 3 houses? Well, first of all, it's just tax deduction. That's probably the biggest thing that I see a lot of people ignoring or just not noticing. So when you buy one house as an investment property, there's a few things you can claim on your tax. Depreciation is one of that, because houses do tend to go down in value. Whether it's an apartment or townhouse or an actual house, you can claim on that. That's one. The second thing you could claim on is just your general losses on the house. If it's negatively geared, you can get some money out of that. So yes, tax is one of the reasons though, but the second thing is just having a passive income there. Like if your tax bill comes back and gives you, say for example, $5,000 extra each year on top of what you're already getting, I don't know what they'll do for anyone, but for me, that's a holiday. So why wouldn't I take it? And the third part is just, if you want to leave your house to your kids, I would much rather leave them a house with no debt on it. So why are we getting investment properties is probably at 10, we might want to sell it and get the growth you have in there, whatever equity you have in that house, pay down the owner-occupied debt. Now you have a house that's unencumbered. Unencumbered just means no debt on it, and you're free to do whatever you want with that. Whereas the previous Aussie dream was, you buy a house, pay it over 30 years, you retire, you have a house debt free, which I assume a lot of people have inherited that sort of house, and it has so much growth in it. But it's essentially harder to do that now, because rates are higher now, property prices are relatively higher now, so it's relatively harder to just keep one house and maintain it through to retirement, which is the third thing I was going to talk about, is just your retirement funding. On average, if you're on the dole, you get about $300 each week if you're a single person. If it's a couple, it's about $700. I don't know about you, but I won't be able to survive on $300. And the older you get, you've got more health issues, or you've got a bigger family. You want to travel, you want to spend more time with people that are in Perth, overseas. I would much rather have enough income at that stage to do all that stuff rather than be stuck with 300 bucks. So why are you creating a passive income? It's to fund that lifestyle aspect of things. I'm not saying everyone should be able to retire at 45, but you should have the option too. If it's not 45, it's 50. You should have an option to retire early. And you continuing to work is just purely out of choice. I would much rather, I think it's a safer space to be in that way than the alternative. Been doing for some of our clients. I've got a client of mine who's a doctor, lucky for her, fairly young lady. So she lives out of Sydney, but essentially what she wanted to do, she wanted to get a house in Sydney, but because of Sydney property prices heavily inflated, not that she cannot afford it, she can afford it on any day. But we introduced a method called the rent vesting. So rent vesting is basically you buy where you can afford, in this case anywhere really for her, but you buy where you can afford at a lesser amount, and you leave still where you want to. So she still wanted to buy close to the hospital she works at, which at that time, getting an apartment there was about $1.2 million. Now, I'm not saying she couldn't afford it, she could afford it, but the idea was, let's not overspend on the apartment. It's an apartment at the end of the day. Not saying it's not an ideal investment, it's perfect. But what I would rather do is, with that sort of budget and the amount of deposit she had, she could actually buy 2 houses here in Victoria. So at the moment, we're building one in Tane. It's at frame stage at the moment. Completion is in the next 2 months, give or take. Hopefully bad weather does permit. And then she has another house that we bought for her as a completed house, brand new, from one of our builder partners. As everyone at the moment is, the market has faced a few challenges. I will talk about that later. But so we bought a completed house for her, and then we bought a second house as a house and land package, and she's building it at the moment. Completion is in 2 months. But whilst we're doing this, we're actually in conversations with her now. We have a contract on the table for the 3rd property, and we've all been able to do this in the past 18 months. So we've built a portfolio in a space of about 14 months now. 3 houses, 1 person, single, she's not married, fairly young, like I said, young doctor, just started a career. I think if anyone could take anything out of this, is it's actually very much possible for anyone there. It's just by having the right strategy behind it. So this is one client. I've got other clients who are nurses, first home buyers. They came to us with just minimum deposit, only had 15,000. So what we were able to do for them is put them in touch with all the grants they could afford, they could be a part of, and we've helped them buy their first houses. And as we speak, we have a plan, and we're still saving up for the next property. I've got one client of mine, also female, single. We're buying the second house right now as a house and land package in Tarnet as we speak. So the beauty about the business where it is now is it's just been able to allow me to create long-term relationships with people, but not just baseless relationships. Like, they are seeing the value in networking with people who are experiencing the industry. And I predict, like I was saying earlier, the industry has had its own challenges as a whole. In construction, I'm sure we've seen a lot of big players go under. Very unfortunate situation for both parties, people who work for the company, because that's loss of an income, but also the clients that had their deposits in there and had some houses under construction. No one wants to be in that position, although it's competition for us. But I like to look at it as we've always had healthy competition with everyone. No one wants to see that happen because it creates a negative outlook on the whole industry. So we've transitioned the way we used to transact in the past. In the past, we didn't care much about insurance. Not that we didn't care about it, but there wasn't a big spotlight on it. But now everyone has to have their deposit insured. Everyone has to have the build insurance. Although if your builder does go under, another builder company will just be allocated by the administrators or the insurance company and will just take on the build. Still, no one wants to be in that space. So what that created is a lot of people are now scared to go into the house and land space. everyone is fighting for an established house. What that did in some areas that I do know of, like Clyde, for example, it's actually harder to find an established house and more expensive to find an established house than just find a house and land package in Clyde. It's actually cheaper to build there now. So the advantage there now is, yes, people are still scared to build in most areas, in most parts, but now some areas are actually cheaper to build. And people are coming to people like me for advice. And I see that trend going into the future. Most transactions from a house and land or a new build perspective are going to be done by either a buyer's agent or a company like ours. We just help people invest. And the reason why people come to us is we know who to work with, we know the ins and outs of construction, we know how to filter out between the good and the bad, we know what to look for when it comes to insurances, we know what to look for when it comes to time frame. Where price is essentially affected now, everyone wants a cheaper build. Our focus is not on cheap. Our focus is on delivery, because I'd much rather have a house at $10,000 more expensive than go to the cheapest guy in hope that I will get the house. I would much rather have the assurance that I'm going to get my house in a good time frame and it's going to be good quality, and after building it, if there is anything that needs fixing, I have a phone number to call and someone will come and fix the issue for me. And that's why people come to people like me. It's just the expertise, but moreover the relationships that we have that a normal mom and dad will potentially not have in the industry, to be able to evaluate who exactly they should use for the new build. So to answer the question, yes, it's still a great time to build. If I were looking to invest in property right now, obviously for the benefits of stamp duty and less upfront fees, I would definitely be looking at a new build for my next investment. So if anyone is looking to invest in property or just get started with getting your first house, or you just need general advice on how to get into the property market or anything property related, our company is called David Willard's Group. Feel free to reach us out at any of our socials. Is the same name, David Willard's Group. My socials are all under David Muchacha. So you type in the name, I will pop out through. I have a few videos there, explainers of how we do things. Where we service at the moment, I think that's a very much important question. So anywhere in the country, across the whole eastern seaboard. So if you're looking to build in Perth, in Queensland, if you're looking to build in New South Wales or here in Melbourne, although we are based here in Melbourne, but we do have a team member across the state. I've got teams in Perth, I've got teams in Queensland and also New South Wales that can help you out if you want to see someone face to face. Otherwise, we are here to service you either from here as well. I'm happy to fly in if you need me personally to come see you. I'm happy to fly in to see you and guide you through whatever you need guidance on. We're just in St Kilda Road, number 1 St Kilda Road, if you want to visit our office. But otherwise, feel free to reach us through our socials or my mobile 0414 012 094. My name is David. It's been great chatting to you.